Hello friends, welcome back for Ethereum Technical Analysis. I'm Rocky Outcrop. We're all Rocky Outcrop Titians together on the channel, and if this is your first time joining us, then welcome to the family. Let's just roll on with the intros and get into the charts and see what's been going on. Hi, so welcome back to the charts, and I suppose let's just start off this episode by going over to the YouTube channel, and I had a wee joke with the Nina Simone there in the Bitcoin video. Check it out if you want to see a funny-ish intro. In my opinion, it's funny and enjoyable. In your opinion, it sucks balls. I don't know. Yeah, sorry. So I just wanted to say to this chap
Hello,
over
friends.
here,
This is going to be
just shut up your face. To say to this chap here, will Ethereum drop below 100, and how would you decide when to sell? Now, of course, the simple answer to that there was well, in my videos I kind of talk about risk management, profit taking zones, support and resistance, and all this sort of stuff, and it's in and around those areas that I would decide how and when to sell. And overall, I suppose I was thinking that between 160 and $180 was really sort of where I was drawing the Alamo there. And I said to the person that that overall it's hard to know. It could go down as far as 78 or so. Who knows? And it'd be tough here. And then I actually said maybe I'd stop out at 92 or so, but you see, it's like that would be if there was no immediate bounce from under the level. So just to address sort of how I spoke about that last night to that person, and of course to everybody looking in here on the channel, what I meant by a sort of immediate bounce can be kind of seen here is the prices got down here on this candle, this 4-hour candle here to 99. Then they came down as far as 86, and they did have a sort of an immediate bounce there at that area. So we're kind of looking out for that around that price action. Of course, we pointed out as well in yesterday's video that the prices could go as far down as well these lines here, like the go to the 24 hours so it's easier to do this. Thank you for your patience there. So the prices could go down to this like 102 level, then of course then perhaps down as far as 80, and if we were to break below these areas in a big sort of catastrophic fall down, and ultimately that ended up being the case. And but overall, what we're looking at then for today, and how is this panning out? And you can see this crazy price action that we've had. So just draw a rough measurement here on the sort of yesterday's candle. You can see 50% price dropped off 50% yesterday, and this is of course on the BitMEX chart here, so we've got all of our volatility from liquidations and whatnot included, of course. And then looking up, how far up did the price go? 105% increase in the price in that immediate time following after the sort of, so talking about immediate bounces, there you go. And of course the prices what we're looking at currently are up 18% on the day, which doesn't tell the full story. Again, you go down to the hourly chart and you can see again like that candle there with the huge 105% increase, that was in the space of 1 hour. Then of course the prices then were operating at a decreased rate again, down there of 36% down in the following hours, when we saw price increases in that candle of an additional 35% as well. So like that's real. That's that's your distilled volatility for you. And what does this add up to? Well, potentially it adds up to us having found a sort of bottom at the minute. Now, I don't want to get ahead of myself, so I'm going to throw a big disclaimer out there. Obviously, there's the standard every video. I'm not a financial advisor, none is financial advice, yada yada. Always do your own research and due diligence before making any financial decisions. But yeah, so anyway, could this be something like this? And well, you do have to kind of look towards how the prices moved and how they reacted here in around that time. And there's obviously been an awful lot of shakeout in the market, and we can do a sort of quick sort of Fibonacci. I'll go back up to the 24-hour here so it actually is visible for us. And shall we just delete these other ones? I feel like we could move that down a bit again here to that wick, and then we can maybe use this one. Is this what top is it coming in from? It's coming in from the tops over here. is that it here? It's not going wick to wick though. I'm going to make that wick to wick. So we're going wick to wick on a Fibonacci retracement over here from the June all the way down to where we are here at the bottoms in March 2020. So like 9 months or whatever, June 2019 down to here. March 2020, and looking and saying, well, if this was one, then when would we look to see where would we look to see the prices get to in order to start looking for upward side targets? And we'd need to see opens and closes of 4-hour candles or more above $151, which is obviously feels quite remarkably far away from where we are, but we're talking about huge amounts of volatility at the minute. So if we were to see something like another additional 30% increase in price, 25% increase in price from where we are right now, then you would be achieving that, and you could be looking towards these upside targets. Now, of course, the targets thereafter are not necessarily going to be as flattering as that. You know, you're only looking for an additional 25% thereafter. So, is this maybe making the sort of sense that we want it to make for us right now? I'd say it isn't, and instead we could take this Fibonacci retracement drawn in from here in the highs of Valentine's Day down to where we are now, and see if there's a more sort of reasonable target for a sort of trying to re-establish the trend, which at that time was the uptrend from the December times to February time there. And where would that price make us need to get to? So that's $134, and I think that's maybe a bit more reasonable in terms of looking for trying to find a foothold. And that's an additional 10% up from where the price is currently. So, you know, again, that's a hell of a lot more achievable. Really does depend on how things go over the next wee while. But should these things start happening, then you would retrospectively, you would look back at this and you would say, well, that was the bottom. Look how it's bought up and how we've reacted since. Of course, now if on the other hand, that doesn't happen and the prices were to sink down and it's not actually got up as high as that 135-ish level, then, and the prices were to say, for instance, open and close around about this $100 level, I would indeed look back down to that 85 again and say that then say maybe we'll get a bottom information which is like a double bottom, you know, or maybe we'll actually just continue on down. But you'd have to review that at the time of when that's happening. And of course, this is kind of how I'm looking at it for now. So, you know, that kind of sums up where we are. If you want sort of intermediate targets or whatever, other than like 100 and 105 doesn't work for you, to the downside. I'm not a financial advisor, not as financial advice or whatever, but then I have to go down a time frame or something, take a look. Now, is there any point in looking at things like divergences or whatever? Right now, I'm going to say no, because there's a really good chance that there'll be a whole bunch of them turning up at the minute. But we're looking at these horizontal lines just immediately in terms of like trying to see where we're going over the next 12 to 48 hours. And in terms of, but as it happens in terms of divergences, you know, the stochastics could be showing some. It depending on how this all pans out. It could be, but we've been saying that for days, you know, and there's no point in being preemptive about these things. It doesn't work like that. And if you look towards, then you're looking towards the bottoms in this downtrend, and have we got bullish divergence on the go? Well, you know, no, not really. And the DMI, well, it's just strengthening. By the way, had that on the last couple of videos, took it off in favor of the VPVR because I just wanted to have a reminder now that we are down here in this area of where all the trading activity picks back in again. That you've got this. This massive drop off in prices right between where we are here at the sort of, well, you know, where you'd have to achieve on our lower term sort of time frame target for an upside reversal of 136, and then of course up here above the larger one of 155. That's right in the middle of this complete lack of trade in there, as you can see on the charts. I almost pointed my finger again at them for you, and then it only really comes back in again once you're above that. So that would really kind of frame the trend at the time for us, and that's what we're looking at. Does that wrap it up? I mean, it really does. It wraps it up. The 24-hour chart, you know, looking for divergences or anything on this right now is as opposed to doing what I was talking about, is kind of silly, really. You know, we're just going to trade it off the back of where we kind of end up at, and it makes it easier to manage our risk. Likewise, by the way, you can inverse everything for shorting. For instance, you could maybe try and have shorted at any of these targets here. on, you know, for instance, it actually already made it back up and retraced as far as high as the 382, and nearly got as high as the 50% overall, actually. 328, 382, yeah, tripping over myself there. So, you know, and it's come back down again. So that actually could be enough in terms of a retracement there. We've already done it all. It just happened super condensed and fast. And I think the reason for that is because of, you know, in terms of the longer term cryptocurrency fundamental market structure stuff, that there's a lot of positivity out there for the back end of this year coming up, following the halving on Bitcoin and stuff like that. Of course, you've got Ethereum 2.0 and all this jazz. So there's so much good stuff coming, but we've also got the coronavirus giving the sort of the big fish out there the opportunity to sort of shake the market the way that they want to and need to, in advance of all that stuff happening off the back of the coronavirus. And of course then that's just the sort of the conscious effort of individuals, but then in terms of just the sort of the overall world feeling at the minute, we're so very much risk off, and we can, and that, but I do think that by the time that the coronavirus pans out in the UK, for instance, which is expected, or they say it is, to be in about 14 weeks, having got really bad for a period of 4 weeks in the middle, that if you look at that, that's about 3 months away from now. That'll take us up to the period when the halving is actually happening. It should be happening in about 60 days or whatever. So, you know, things like China, which is obviously a good 4 to 8 weeks at least ahead of us, at least 4 weeks ahead of the UK. So if you look at these things, it's taken about 3 months to pan out, and that having happened a month ago, and then the halving happening in 2 months, then all of that coalesces back together again, and let's just see how we pan out on the run up to that. So that's my overall feelings for today in the market. Thanks very much for tuning in, and I'll see you in the next video. Like, subscribe, and share this video with any of your mates that you think might like it too. And I actually haven't watched anybody else, by the way. Don't watch anybody else doing these videos, so I don't know how everybody else is reacting or what their chat is or whatever. But if you want to see a funny reaction, then watch my Chainlink video from yesterday when I see the prices that got down to, and I'm about to look at Chainlink now again for today's video. If you watch them all, I'll see you there. Thanks very much for joining us today, and I'll see you next time.